Hello again and welcome back to the RegalX Trading Academy video courses. My name is Daniel Garcia and I'm your instructor on this video course series today. This is course number 5 of the advanced material. Today we're going to speak about risk, how to manage risk, how to understand and identify risk, what measures can we take to control risk, and also within that respect we're going to talk about what is a stop loss, what is a take profit, what does trailing mean? It's securing your profits basically. And talk a little bit about how to properly understand using leverage and risk per trade metrics. But before we start with all this, let's put one big question, the elephant in the living room, up here. So why is paying attention to risk even important? What's the reason for that? The reason is because you want to avoid losses. So I prepared this little table here. I just want to give you an idea. On the left side you see a loss. Let's just say we lose 10% on the right side. You see how much you need to make again to reach the same level you were on before? So basically when you lose 10% of the account, you need to make up 11.11% to be back at zero, basically at where you started. But look how this turns massively quickly against you. So if you lose 30%, you need to make up for almost 43% to be back at zero. If you lose 60% of the account, you need to make 150%. If you lose 80% of the account, you need to take 400%. And obviously if you lose 100% of the account, there's nothing to win back. But these metrics should show you that paying attention to risk is very, very important. And how do we track risk? Well, for one, we should always have a game plan. We should always think the trade that we're doing must be based on something specific. You can't just shoot out from your hip and expect to have continuous results. This is not a board you can throw darts at and see what sticks, because then you know the math just works against you. So it's very important to have a trade plan. And when you do the trade plan, which we discussed in an earlier webinar here also, or video, is that you boil down, you go through several layers of looking on how to put up a trade. Like, okay, so now the market is doing this, I compare it with something technical. Maybe I use another technical, maybe I use another indicator. Maybe I use a fundamental expectation. Then I define where I want to trade to. What is my risk against it? And we get to that a little bit more into risk per trade metrics. But first of all, by defining your plan, you understand, or you get a much better idea of what your risk is doing that plan. Because you will put a number on it. I'm risking 2% and risking 3%. I'm risking 1%. I'm risking 50 pips. So this is how you identify your risk. Now, what measures do you take to control the risk? Well, first of all, you should be looking at trade opportunities that make sense from the start. So we talked earlier about different types of time frames and strategies that you have to do with these time frames. But you should, for one, very much pay attention that the trade you want to capture should have a bigger portion. Or, very simply stated, you need to win more than you lose. It doesn't have to be the frequency of trades. It can also be your hit ratio. You know what I mean? So you need to figure out what kind of trader you are. What kind of risk reward am I choosing? So this all boils down to the same that we talked about before. Number one, that you need to identify a risk. Identify risk by putting metrics, by defining what you're actually going to do, and that's very important to define. And that's what you use to take profit and stop losses. So basically, when you enter a market and you define a trade that you do, let's just say I enter here right now. I think I want to buy the euro up. Maybe it tries again to retest these highs here. So let's just say my target is around here. So that's about 37 pips. And when you come from here and you say, okay, I want to put my stop loss down here where the market broke through last time and it went further down. So my buy position trades are going, so those are like 17, 20 pips, you know. So you have, let's just say it's 20 pips or 40 pips. So if you win, you're going to win 40. If you lose, you're going to lose 20. So the risk reward that you take in is 2 to 1. And you should always take trades that give you an edge in terms of when you score, it's going to be more than when you lose. If you choose 1 to 1, okay, if you do 1 to 1, then your hit rate needs to be higher. Meaning why? Whereas if you have the 2 to 1, let's say you need to win only 40% of your trades. That number is not entirely accurate. I would need to look it up. Just as an idea, if you win and lose 50-50, then you need to trade a lot higher percentage of like frequency of trades. Your hit rate, you need to be right with your 50%. A lot more often in order to be more profitable. So these are considerations you have to make in terms of strength, the frequency or type of trading that you're doing, and also the hit rate of your strategy, like the percentage of being right. That's definitely something that is important. You have to put in relationship the risk reward with the hit rate and then find that kind of ratio that you're really opting for. Then stop losses, take profits, meaning define your risk. Define your maximum exposure to the downside, to the upside. And if you put a price on it, you'll see also the P&L. You already know it's defined. You have an idea. Trailing means that you should usually try to cut your losses quite quickly and let your winners run. So it means if you have a winner who reaches its target, you can say, all right, I'm not going to take the position out of the market right now. I may give it, say, 25, 30 pips trading. And when the more the price goes up after the target, the trading stop will follow the highest price reached in the distance of 25 pips. So if the market continues to move, you can just trail your profits with moving the market. And here, something you need to also figure out about your market, that your trading has to do with the average daily range, with the volatility pattern. That's like, whereas a suitable trading stop to set, also depending on the time frame that you're using, but generally it's a helpful tool in order to just pull as much profits as you can out. And very important, understand your proper leveraging, meaning if you define that you're going to lose 1% here or 2% or whatever, then you will know exactly what lot size you will have to trade based on your account size. If you just use one lot, okay, one lot looks little as it's a 1, right? But one lot corresponds to 100,000 of the currency that you're trading. And if your account, let's just say, is only $1,000 large, you're already leveraging with 100 to 1. In fact, in the new regulations in terms of leverage, restrictions will change that or will make it less. Will not make it possible anymore for you to take 100 to 1 leverage. You should still understand what you're actually doing, and that's really the way to define your risk, to identify it, to get a grip on it, and then find out, all right, if I lost, is there a pattern in my losing? Do I lose when I try to capture something specific? Do I lose on a certain pair? Should I try a different one? Should I widen my approach? So you have to audit yourself. It's very important that you audit yourself, and you need to do proper documentation of what you're doing versus what you're achieving. If, of course, you are very committed to it. Obviously, some people do it for fun, and I will not start blaming or pointing fingers at anyone who's just having fun betting on a market. So either way, what we're trying to do is show you how it can be done when it's done as a pro and with a professional approach. We want to see you succeed in your endeavors. We now conclude our Trading Academy education video series for today. We really hope that the material presented to you today in a more practical manner rather than a theoretical one has helped you cover any gaps and answer your questions. For the daily market updates and live trading events, please make sure to check our upcoming webinars. Until we meet again, have a great day.